Well, we have with us David Morgan, and he's the author of the Morgan Report, and he is now renowned across the globe as the Silver Guru. David, good to hear you.
Well, great. Thanks for having me.
So right now you're at a convention, is that right?
Yes, I'm at the Silver and Gold Summit in San Francisco, California. It used to be in Spokane or Coeur d'Alene every year since we developed this conference, and they moved it to San Francisco the last couple of years.
Was that because Coeur d'Alene Mines moved out of the area?
Well, it had to do with a lot of things, but the space was getting rather stale. So I thought they'd try a major city, and there was a lot of silver around San Francisco back in the day. I mean, everyone thinks about the 49ers and the gold strikes and all that, which is true, of course, but a lot of silver flowed through this city as well.
Interesting. So are you able to go and do a little bit of sightseeing in some of the old silver mining sites?
No, it's what's left of the mining industry is mostly gold in the Bay Area, and they're just, museum pieces type of thing. There's not too much until you get into the North Bay above San Francisco.
Yeah, well, I've heard all the gold in San Francisco is in somebody else's bank account. Is that right? Didn't we have a
something like that
country western song about that? I'm just wondering. Anyway. So, well, we've got the election behind us. We've got Thanksgiving ahead of us. And so what are some things you can tell us about what you think is going to happen with gold and silver upcoming?
And speaking of which, they after the election, they kind of went up and then they went way down.
Yes, thanks. And I'm going to preface it with what I was asked at the Mines and Money Conference in Toronto prior to the election. The Canadians are very interested in our politics, and specifically, this interviewer was concerned with, what would it mean with my opinion on a Trump win or a Clinton win. And I stated that I felt it would be like changing the captain on the Titanic. I think that the systemic problems
Good point.
I think the systemic problems within the physical economy are so deep, so entrenched, and so debt and derivative based, and they've expanded so much since the 2008 crisis that it really was a good metaphor that it might give people a good feeling or, one side or the other, depending on their political views, but that it really wouldn't have substantive or meaningful change. So then there were many out there in my community that were very, very convinced that the markets had priced in a Hillary or a Clinton win, and that there was a very big opportunity that if Trump went in, there was a trade that could be put on the markets, which would be to short the stock market and go long gold. It was formatted primarily with Jim Rickards, but there are a few others that advocated the same type of short-term trade.
Right.
And lo and behold, it manifested, but only for a few hours, actually. And if you were U.S.-based and had that trade on, unless you had a global trading account that could off your trade in the middle of the night, you would have a pretty hard time exiting it. So, in other words, if you had to complete the trade, you would have actually, by the time the markets opened in the U.S., had a difficult time making a profit, even though during the night at one point in time, gold was up like over 30 or more, and the Dow was off about 800 points. So again, that trade was a good call for a very short time, and for as far as execution is concerned, it would be very hard for most U.S. investors to actually execute. So what took place after that was the markets went the other direction. Gold started to get suppressed, and the stock market started to move up. And this has been the case basically ever since the election. We've seen a stronger market, a good dollar, and a sell-off in the precious metals of a rather significant amount.
The conventional wisdom is that there are going to be some very troublesome economic times ahead, and that this gives the Democrats the opportunity to blame all of the mess on the Republicans. I mean, you can't win for losing. Your example of changing captains on the Titanic is probably pretty accurate. We've got so much debt. I mean, we're up to almost $20 trillion, and that's just the debt that we have in the budget. It's not even counting the unfunded liabilities that we have. Those are up into the 70 trillion or more.
So getting back to your metaphor, what's going to happen is the captain that hit the iceberg will not get blamed. It'll be the last guy on the boat that'll get blamed.
Yep. Yeah.
That's right. And he may rearrange the deck chairs, and the orchestra may play a more upbeat, happy tune. And there might be a speech given that gets people feeling good, and all that is, again, making the metaphor a bit longer to say that the systemic problem, again, is already it's built into the system. Monetary policy, as we all know, is basically what the Federal Reserve does, and that's how much money they put in the system. But that's all gone to the bank. So we've had QE1, 2, Operation Twist, TARP. We've had all these things, and nothing has happened to stimulate the economy. Fiscal policy is when the government puts money in the economy directly by government make-work jobs, and sometimes not make-work, they're worthwhile. For example, infrastructure. So Trump has already alluded to this quite heavily, didn't get his specifics, but there'd be fiscal policy. So this is a way for government to spend money and actually get it into the back pockets of the Americans working on a government-sponsored project. I think this will change the mood in the country somewhat, and it obviously will put inflation into the system directly, because right now, again, all the inflation is sterilized by the banking system. So I think I'm somewhat positive to that. I'm not a Keynesian by a long shot, but if you're going to, make money out of thin air, at least if you get some utilization out of it, that's better than just making sure the banking system stays solvent when everyone else seems to be having a lower and lower lifestyle. Yeah. So that's my take on it. I think it'll be kind of a feel-good thing, but it won't have any substantive impact on the general outlook on the economy, either in the U.S. or elsewhere.
So just to hearken back to your hard-to-execute comment about, dealing with a trade that's in the market and trying to get out of the market or something, it takes a while for Dave to help our clients to move money. It just it does not overnight. It is not an overnight thing. It can take weeks. And so now is the time to begin thinking about what do you want to have your portfolio look like by the end of this fiscal year. The end of 2016 is coming up, and you've got Thanksgiving, you've got Christmas, you've got a lot of activities, and oftentimes people get buried in the stuff of the season, and then right after Christmas, they want to make a change before the new year. Well, it's a little bit late to do that, folks. So if you would like to get a wealth diagnosis, get the process started now. That may take, 2, 3, 4 weeks to complete. Give us a call at 509-32-SMART. That's 327-6278. Remember, Idaho listeners, we have offices in both downtown Coeur d'Alene and in Spokane. Just use that prefix 509-32-SMART, 327-6278. We'll have more with David Morgan right after these important announcements. In today's challenging economic environment, it can be difficult to know the best way to manage your wealth. Hi, I'm Steve with Altmeyer Financial Group and the host of Smart Wealth Radio. I strive to work with my clients to help relieve the stress over growing and protecting their wealth. Frank and Joella are so happy they wanted to share their story.
We lost a fair amount of money in the stock market. For us, we lost about half of what we had saved. Now, granted, we did get most of that back over the years, but at 65, we thought there's no way we have the earning capacity to replenish that. So we found Steve.
We've been relaxed because what he showed us and presented to us is really a no-risk deal.
Frank and Joella, thank you for your kind words. Call me today, 327-6278. Altmeyer Financial Group, 509-327-6278. We want to help you be smart about the health of your wealth. Welcome back to Smart Wealth Radio, sponsored by Altmeyer Financial Group. I'm your host, Steve.
And I'm Dave, and this is the show where you're learning to be smart about the health of your wealth.
Altmeyer Financial Group. Altmeyer, now that's a name that you can trust. Altmeyer name is well known here in the Spokane area. And we're grateful to the Altmeyer family for what they've done over the decades with the homeless here in Spokane. Do give us a call at 509-32-SMART. That's 327-6278 to get a wealth diagnosis and second opinion. And for all the callers today, we will also include a $250 value Social Security timing report. Give us a call, 509-32-SMART. That's 327-6278. So, David, we covered a number of important issues before the break, and people are wondering, there's always some uncertainty. And whenever we're talking about finances and the stock market and other kinds of investments, that uncertainty can oftentimes drive the market a certain direction. But people are uncertain right now. We've got, rioting in the streets in some places because people are didn't get their own way. So it's just a very bizarre time. What are your thoughts?
Well, my thoughts are, one, I agree. And my thinking is that the more uncertain times that we are experiencing, the more it is a basis to invest in hard metals. I mean, the book that you put out, Steve, that I read and commented on, really builds a portfolio that is balanced. And we all strive that in life. We want our situation in our lives to be balanced. You don't want all work and no play, all play and no work, etc. So in a balanced portfolio, you really have to have something that you're certain about. And those most known things for a certainty for purchasing something in the near term today or in the future is money. We all know that. What we don't know for about 99% of the population is that all fiat currencies has failed 100%. And to think that the U.S. dollar won't fail is something I could build an argument against. However, the reality is that usually they don't fail 100%. But the uncertainty implies strongly that you need some gold and silver. Some, not all. In fact, I've looked at a lecture that I attended yesterday by CPM Group, which does all the commodities, gold, silver, copper, moly, lithium, uranium, you name it. They do them all. They do an in-depth study. It's a Wall Street firm. I know the founder, and I've known him for years, and he gave a lecture on silver and gold, but primarily on silver, and how underinvested it is. If you take all of the world's assets, the bond market, stock markets, ETFs, everything that's out there in the paper paradigm, and you look at the silver market physically, 0.02% of all the world's wealth is invested in physical silver. That's how small the market is. So I think that you really need to have something that you are certain about in a time of uncertainty. Gold and silver have acted and have been used as money for thousands of years, and that's some certainty in a very uncertain world. Does that mean that you take a huge position? No, you don't. You take a reasonable position. But I'm getting to the point, and he did an analysis over the last decade on portfolio balance and how much physical metal you should have in your portfolio. And he came out with a number of 25%. Now, I want to be on record, Dave and Steve, to say that I think that's a bit high. Ibbotson and Associates did a study back about a decade before his, and Jeff Christian's his name, CPM Group, but let me get that out. And Ibbotson and Associates came out with about a 15.7% allocation. I've advocated 10% is probably best for most people, as high as 20% if you're a real believer in, what I'm stressing about the economic conditions and how important precious metals are. I would say 25 is basically too much, but that's an opinion, but a strong one. So, but that was an interesting number because he's got the most recent study.
Interesting. 25%. That is a lot.
Again, I want people to be uncomfortable because it is a static investment for the most part. So, I'm very happy with 10 for most people. And as I said, if you want to go higher from there, that's an individual choice. Because some people are very, very comfortable, such as myself, that have been in that part of the market for so long. But someone's never bought physical metal. Oh boy, it's kind of scary the first time.
I know that we do have some listeners that actually have more than 25% in physical metals. And they seem to be very comfortable with that. They view it as the next, currency. However, gold and silver does not give you an income. It is historically currency, but it doesn't produce anything. It doesn't produce an income. You're not going to get a dividend stream off of gold and silver. Physical gold and silver just doesn't do that. It's a different asset class altogether. And the book that David was referring to is my new book, Building a Solid Foundation for True Wealth, Your Blueprint for Success. And that is in its final line edit. In fact, we're just doing the graphics and approving the interior design and some of the final, very, very final steps. The book will be in print, I'm told, the third week in January. It's an interesting process. David, you have written several books. In fact, your book, the Silver Manifesto, has been out here for about a year and a half, but you have also written another shorter book. Is that right?
That's correct. In fact, it just got published by Lulu, and we have it here at the Gold and Silver Summit, and we're signing copies for the crowd here that are interested in our work. But it's called Second Chance, and the subtitle has to do with the coming largest move in the precious metals probably in history, and that's a belief can't be proven yet. But it's a exit strategy for how to take profits off the table and what we think will be the third or last leg up in this ongoing secular bull market. So it's been well received so far. We do have a website URL. I think it's called thesecondchancebook.com. You can probably Google Second Chance Book in Google, and you'll get the correct URL. I'm pretty sure I'm correct on that. And again, it's an outline for the novice or the experienced precious metals investor, emphasizing don't leave much on the table. Things do go undervalued, fair valued, and overvalued. When the metals get overvalued, you have several exit strategies that David Smith, who's worked with me for years, and I have outlined in this book.
You also have a newsletter that people can subscribe to. What's the URL for that newsletter?
Yes, themorganreport.com. Again, themorganreport, one word.com. And you can get on our free email list. It doesn't cost you a thing. And you'll get some great information, 2 movies that talk about where we are in the economic system, why the derivatives issue is such an important one to understand. And also there's a documentary, again, for free, that talks about what's happened with a bail-in situation, which is what I actually think we're facing in the years ahead. I think it could take place probably within the next 3 to 4 years.
For listeners that are new to our radio show, we've talked about the bail-in, but for new listeners, David, could you take just a moment to explain that just before our break?
Sure. We've had bailouts so far, and this is where the government puts the burden of replenishing the bank's money by having the taxpayers pay for it. So they basically reliquefy the bank, create money out of thin air, and say, you taxpayers are on the hook for it. A bail-in situation is where the banks get bailed out again, except it's by the depositors. So the people that have money in the bank have their what's called a haircut, which is a reference to taking their deposits, some like 50%, 40%, 30%, some unknown amount, but a good what's called haircut. In other words, taking money from your account and giving to the banks to keep them solvent. In exchange for that, without your permission, they'll give you shares of stock into the giving bank. But it's basically, in my view, this is my personal view, stealing from the depositors. And that's what we're facing. That's at law. The Dodd-Frank bill passed. You cannot bail out anymore. You have to bail in.
Right. And we'll chat with you more about that, David, right after the break. Listeners, call 509-32-SMART. That's 327-6278. We'll talk more right after these important announcements.
Altmeyer Financial Group can help you feel confident about having enough income at retirement while protecting your money. How? Give Dave or Steve a call, 509-32-SMART. That's 509-327-6278. No one knows for sure where our economy is headed, but Altmeyer Financial Group can give you the peace of mind knowing that your money is protected and delivering a sizable return.
Welcome back to Smart Wealth Radio, sponsored by Altmeyer Financial Group. I'm your host, Steve.
And I'm Dave, and this is the show where you're learning to be smart about the health of your wealth.
The Altmeyer Financial Group has as its goal a better outcome for your income. If you'd like to turn that big pile of cash into an income stream that can last the rest of your lifetime, make sure that you give Dave Altmeyer a call at 509-32-SMART. That's 327-6278. We'll schedule a wealth diagnosis and second opinion and get you on the road to a predictable lifetime income. 509-32-SMART. That's 327-6278.
So, David, Mr. Trump has said he wants to get rid of the Dodd-Frank bill, and the Dodd-Frank bill contains the bail-in feature. My guess is most of our listeners here are against a bail-out. So do you think that part will still stay in, or will they, go back to the old days?
Really don't know. I don't think any of us do. I think I'm in favor of. I'm not in favor of either one. I'm free market. I think if a bank fails, it should fail. I mean, one of my earliest speeches I ever gave, and excuse the ego, but I got not a standing ovation, but a round of applause, was that the American dream is about the right to succeed, but to have the opportunity to succeed also guarantees the right to fail as well. And a true free market, if you, Dave, or you, Steve, have a great idea and you implement the idea and you start producing, the business acronym widget, some product that you think is going to be wonderful, but the market says, no, we don't like this product that you've created, you are going to fail. And it's part of the process of a free market. So the right to succeed also is the right to fail. But this is something we've left out of the equation for several years now. And these big banks are too big to fail. Well, why are they too big to fail? So really, it would have been very painful. It would have been extreme to the super wealthy to see these banks fail, but that would have been the most expeditious and fairest way for the free enterprise system to march on majestically after, I would think, 2 or 3 years of pain. It probably would have taken that long. The way it's gone on now, where they've only made it worse and worse and worse, means that the pain is going to be prolonged, and it's going to be more devastating than it would have been if we just took our medicine at the time. But we have this propensity to protect everybody and try to circumvent what I call the laws of nature. There's a reason why businesses succeed and why they fail, and why we have the opportunity to come back a second or third or fourth time. The don't give up idea is a very important one for the entrepreneurial spirit. A lot of multimillionaires had 1 or 2 or 3 businesses that failed at first, learned from them, and moved on.
Right.
So during our break, I did check on the book, David, and probably the easiest way to get to it is just to go to www.lulu, that's LULU.com, lulu.com, and then just search for Second Chance by David Morgan, and you'll find the book there. This is a $20 book, 260 pages. You do like to write long books, but there's a lot of great content in the books that you write. And so, though I've not read the book, if it's anything close to the books you've written in the past, it's going to be definitely a bestseller. So I encourage you listeners to go to lulu.com, get a copy of David Morgan's book, Second Chance. And just to remind you, for those that have just joined us here on our radio show, David also has a newsletter. And David, please give the URL for that.
Yes, it's themorganreport.com. Again, it's one word, themorganreport.com. Morgan's M-O-R-G-A-N. And you can get a subscription to our free e-letter that comes out once a week. We don't burden you with something every day. We gather information during the week. And I've been doing actually a market perspective weekly update by video. It seems to be the most popular way to get information, and it basically touched on a couple of topics that we did and drilled down further on the show, which was, what happened with this Trump election as far as the gold markets, what was happening in the physical markets, which maybe I'll touch on now. One was that, this chase to circumvent cash in the system has been implemented by Modi in India. He's outlawed the 1,000 and 500 rupee notes, and now the people have scrambled to cash them in, and the most of them have cashed them in for gold. Well, what this did was it took the gold price to over $2,000 an ounce in U.S. terms. And this is a huge physical demand because now banknotes are illegal, or these two banknotes, the 1,000 and the 500. So this, was counterintuitive to government edicts. I mean, this is probably exact opposite of what the government wanted or expected, but the free market does what it does. And what's fascinating is at the same time that this happened, the Trump victory caused a lot of gold metal buying in the UK, and Sharps-Pixley had announced that they were having trouble sourcing some gold product. Just because you have trouble sourcing a gold coin or a gold bar doesn't mean gold is in a shortage. It just means that those particular retail products might be in short supply. So here we are with this big demand on gold all of a sudden, and then the paper markets go into 6,800 tons of gold sold in one day, and it drives the price down substantially in the futures market. So, left scratching our heads again. Why can you have such strong physical demand in India and the United Kingdom, basically setting records, and then have this huge sell-off in the gold market? Well, I'll tell you why. Because the paper paradigm controls the price on a temporary basis.
Governments throughout the world are trying to control the economies, and those of us who are firm believers in what is termed Austrian economics understand that the market is the market. And the believers in Keynesian economics or even Chicago economics, they are proponents of government control of the economy. We're not. The economy is going to do what it's going to do. Consumers are going to do what they do, and the market's going to respond to consumer demand or lack of demand.
I had an interesting conversation a few years ago. I've got a doctor that came from India, and he was talking about when we were talking about, you were talking about India, and they have what's called black money market, and then just like money you buy with government stuff and so on and so forth. Anyway, I said, well, isn't that black money? I mean, isn't that corrupt to do it that way? And he said to me, well, here in the U.S., you have lobbyists. It's the same thing.
Exactly. Yeah, it's just how you frame it. I mean, that's one thing I learned in my international business class. I was a bit naive. I was much younger than I am now. And, the way that we might do business, we think, it's the American way. It's the right way. It's the rule of law and all this. It's so outside of certain cultures that it's laughable to them. So if you really have an international perspective, you've really actually got to think it through and what it means, because you cannot do business one way worldwide. It just doesn't work.
And the economy is somewhat international in nature. Obviously, what affects our lives directly is what's happening around us right here in our own local economy. But it's going to be more far-reaching than that. Say, David, in the last Morgan report that I just got, the E report, you quoted an individual that was talking about the stock market tsunami, and there's a video. I was very intrigued by Weiss Research and what they had to say about the stock market tsunami and what happened after 1932 and what potentially could happen during the next 7 or 8 years. Listeners, do give us a call at 509-32-SMART. Again, that's 327-6278. You can set up a wealth diagnosis with Dave Altmaier of the Altmaier Financial Group. Dave's goal is to give you a better outcome for your income. So that's a wrap for today's show. Listeners, have a wonderful Thanksgiving, and we'll see you next weekend.
Bye-bye.
The information contained herein is not intended to be and shall not constitute an offer to sell, nor the solicitation of any offer to buy any security. Content is provided for information purposes only and is not to be treated as advice to make any specific investment. Please consult with an independent investment advisor before making an investment decision.